Hey, hey! How's everybody doing this morning? Today is June 17th. This is live. So I am going live right now in my Financial Literacy for Women Business Owners Facebook group. If you are not a member, come on over and join us. It is open to men as well, so happy to have you over there. I'm also going live on my Balance CFO Facebook page as well as on my YouTube channel. So wherever you are joining me, say hey so that I know that you can see me because this is live right now. So good morning. Good morning. I'm seeing some people coming through. Great. Awesome. So today was supposed to be just a regular live kind of Q&A update. Didn't have a whole heck of a lot of updates outside of a few things about EIDL that we'll talk about here in a minute. But I thought it was going to be a quiet day. It is not a quiet day, y'all. I don't know if you guys saw it, but this morning the Treasury decided, in the wee hours of the morning to release a bunch of stuff. Let me tell you, a bunch of stuff. And so this morning I was having my morning coffee and I just happened to glance and somebody had sent me an article about it. And whoa, it's been a tizzy since then. So you guys are probably, I see a bunch of you guys joining. Hey guys, you guys are probably joining to find out more about that. So I'll lead with the PPP information. We're going to talk about EIDL at the end as well, because I think both are important and we've got some developments going on both of those. So it's been a little bit quiet on the Western Front for the last, week and a half, which seems like a long break, but not anymore. So we have some information, some of the information that we have been waiting desperately for. We have probably enough information now to go off of for updating our PPP tracker. So there are new forgiveness applications that have come out yet, y'all. And yes, I said applications. I will get to that here in a minute. But if you haven't signed up for the PPP tracker, if you got the PPP or you're considering to get the PPP, we basically have a tracker that will help you actually fill out the entire application. So we're going to revamp them, obviously, because some of these changes have occurred, and there's going to probably be a couple of different options depending on what option you choose and which application you choose and which time period you choose. We'll put out a couple of them, but go ahead and sign up balancecfo.com/PPP tracker. If you're watching this live on June 17th at 10 a.m., right now it's going to send you the old one with a caveat that we're updating it. We will send the updated ones as soon as we have them that will show all the new guidance within it. Okay. There's a lot of you guys on. I got like 160 something of you guys on here. Hey guys. Okay. So I will get to questions here in a minute. Let's really quickly talk about the main changes we have. Okay. So I want to talk first to my self-employed people because I feel like a lot of times I talk to my employers first and the self-employed people are just sitting around like, could you please tell me something that applies to me? So I'm going to talk to you guys first, my sole proprietors, my independent contractors, those of you who are getting the PPP with the primary purpose to pay yourself, right? Maybe you have some ancillary rent or something like that, but you really have gotten it to pay yourself. And really quickly, I see somebody asking me a question about returning it. Yes, if you returned it, you should no longer, assuming the bank has processed it correctly, you should no longer have an active E-Tran account, or E-Tran number, which means you should be able to reapply. Okay, so you can reapply if the new rules, you're like, oh, actually, this is more favorable to me, you can reapply. Or maybe even the timing is just more favorable. Maybe you were worried about PUA and being able to take unemployment at the same time. But now that that's going to be up at the end of the July, PPP might look even more attractive. So we're going to talk self-employeds. Really quickly, I'm going to bring up on my screen because let me tell you the things that if you're ever looking for the guidance, treasury.gov, and then there's a little red bar at the top where you hit that and it's going to take you to where all the guidance is and it'll tell you the dates. So every morning and every evening, I take a look to see if there's anything new out there. So there's a bunch of new stuff out there today. So here we go. Let's talk about it. We had an interim final rule that came out, which didn't have a whole lot of extra information, but it did have a couple of good nuggets that I'll show you. And we had 2 forgiveness applications with their instructions come out. Somebody's asking me the $1 million question. Self-employed with no employees can pay themselves 100% with full forgiveness. Yes. Caveat. Here's my caveat. If you received the right amount of your loan, the right amount of your loan as a self-employed person should have been Schedule C, 2019, okay, y'all are familiar with this now. You know what your Schedule C is. You maybe didn't ever know that before. Schedule C, 2019. Take that number, your line 31 net profit. So this is after all those business expenses, right? It's your revenue minus your expenses. Take that number, divide by 52. Nope. Circle back, two different calculations. Take that number divided by 12, multiply by 2.5. That was the 2.5 months worth of your loan you could get, okay? So that's what your loan amount should have been if you got the full amount of the loan. Some people took only the 8 weeks. And the unfortunate thing there is a lot of people decided to take the 8 weeks because it would be kind of automatically forgiven and they wouldn't have to do as much. It was just the payroll portion. And now with this, they could have taken the whole 2.5 months and been forgiven for it. So that's the unfortunate thing for those that purposefully took the lower amount, right? Or maybe the bank only offered the lower amount because some banks were doing that. But for those of you, if that was your full amount as a self-employed person was 2.5 times your own net profit on your Schedule C, you can take it all, okay? No more of this 850 seconds. Let's throw that out the window. That's not a thing anymore, unless you choose for it to be. If you want to, especially if you want to probably apply sooner, you could choose the 8 weeks if you had enough like rent and other things. But actually, I think I would recommend using the whole thing to pay yourself because there's some tax benefits to that. I'm not going to get into all the ins and outs of how that works. But if you're a sole proprietor and you take the money to pay yourself, you can then keep all your rent deductions and all of that instead of using it PPP to pay for that. So I do think for sole proprietors, it probably makes the most sense to go with the 24-week option. I don't know if you're going to be able to apply early if you're a sole prop to say, look, I'm just going to apply because I'm paying myself the entire amount. So why do I have to wait the whole 24 weeks? I'm not certain on that. But remember, it's your money. It's going to be forgiven whether you apply after 8 weeks or 24 weeks. If that's the amount that you got, you should be good. Okay. So, yes. Okay. So yes, goalposts are changing. I see you, Jason. Goalposts are changing daily. That is absolutely true. But the good thing is, I think in some cases it's making it easier and better, but it's one of those things where like, well, if I had this information to begin with, I would have made a different decision. Absolutely. The way the SBA, I was actually on a webinar with the SBA and I thought this is such a great analogy. There was a guy from the SBA that said, well, basically what we're doing is we're building an airplane while we're flying it, right? Meaning they rolled out this program and they're building it while it's going on and they're changing things. And I kind of laughed when I thought about that. And I was like, I wonder what would happen to an airplane that you were building while you were flying it. I mean, I don't know how well that airplane would do, is all I'm saying. So that is that is very, very true. But I do think it makes it easier. There is also an easy form that all of you who don't have employees right, would be able to use to apply for forgiveness. And this easy form is like, it's exactly what I hoped that it would be, meaning that it is a one page, should be pretty quick to fill in. You have to make a ton of certifications. Basically, they're putting it on you as the business owner to certify that all these things are true. But essentially, they're putting it on you. And there's really not a whole heck of a lot that you have to fill out. So they've gotten rid of a lot of the more detailed pages that weren't really applicable to you as a self-employed person. Anyway, so I've been saying that for a long time, that they need to have an easy form. And I guess they heard me. Somebody out there heard me. Okay. So I'm seeing lots of questions come through. It's hard to keep up. So I'll get to some questions here in a minute. But I want to show you something that's also interesting. So yes, you will get the full 2.5 months as a self-employed person. Here's the interim final rule. Okay, I don't know if y'all can see this. What amounts shall be eligible for forgiveness? So we're going to skip, obviously, payroll costs. This is all the same, everything that we knew before. The thing that has changed is this number 2. Whoops. Okay, is this number 2. Owner compensation replacement calculated based on 2019 net profit. So some of y'all self-employed people, your banks didn't really follow the rules and they gave you a loan based on gross, like your 1099s, right? Unfortunately, you can't then use that to calculate your forgiveness. You still have to use net profit to calculate your forgiveness. And you will need to get your 2019 taxes done. They're due July 15th anyway, which will likely be before anybody's really applying for forgiveness for the most part. So you are going to be required, I would guess every bank's going to require you to have those 2019 tax returns because that's how you're going to determine how much you can be forgiven for your owner pay. Okay. And somebody I saw, I missed the comment, but somebody said they hadn't done their 2019 taxes because they couldn't afford a CPA. Get a CPA to do them. It's going to help you. Okay. Because it can also impact, like, you need somebody that's weighing essentially like the things that you're deducting and the choices that you're making around your 2019 taxes. If you haven't done them yet, you have, you can, there's some judgment you can exercise in doing that. And weighing that against the amount you can be forgiven for PPP and the taxes that you would pay. So I would hire a CPA to make sure that they're looking at that and really thinking about how you can, get the most out of this, right? In a legal way. But I really would not try to do this yourself. Okay. So owner compensation replacement, like I said, based on 2019 net profit and that's line 31 of your Schedule C, you guys. With forgiveness of such amounts limited to 8 weeks worth of 2019 profits for an 8-week cover period. So you can still choose 8 weeks if you want to do that. Like I said, if you've got other things, you could do that. I don't know why you would as a self-employed person though. For an 8-week covered period. Let's see, limited to 8 weeks worth for the 8-week or 2.5 months worth for the 24-week, right? So some people are asking, well, why isn't it 24 weeks worth? Well, the reason is because they only gave you 2.5 months. They should have only given you 2.5 months of net profit anyway, right? So they're not going to say, well, if we accidentally gave you too much, you can use up to 24 weeks, because that would not make it fair to those people who actually got the right amount, right? So I think they're trying to equalize people who maybe got more than they should have to say, look, 2.5 weeks or 2.5 months worth of net profit, that is what you can be forgiven for. Okay? Okay. I hope that makes sense. But basically, you're going to choose that 8-week or the 24-week. You don't need to tell anybody. A lot of people have been asking, do I need to tell somebody? No, you will tell them whether you choose the 8 or 24 weeks when you apply for forgiveness. Okay. And you will have to wait until after that time period is up, more than likely, to be able to apply. Even as a self-employed person, I think they're going to make you wait. So no, this live is not for sole props, but I'm talking to my sole props first because I feel like I usually talk to my employers first, and my sole props are like, please, can you say something that references me? Now, here's what I will say to employers or to people who maybe, well, and these owner compensation replacement, even if you have employees. So if you're a sole proprietor or an LLC, okay, let's talk to you first, and you have employees, this owner replacement also applies to you, okay? This should apply to you. I believe, now they have not come out and said necessarily the limits for employee owners, meaning if you're an S-Corp, right? You are both an owner and an employee of your business, or a C-Corp. They have not come out to say specifically that this is what your limit will be as well, okay? What they have come out to say, though, is if we come up to this one here, when you're talking about employees, payroll costs, including salary, wages, and tips up to $100,000, pay annualized pay per employee, that $100,000 still stays, right? If they're annualized over $100,000, you have to cut it at $100,000. For 24 weeks, it's now a maximum. It used to be $15,385 was the maximum you could pay any employee with PPP. Now, if you choose the 24 weeks, it's $46,154. It's basically, it's just that annualized 100,000, divided by 52 times 24. That's what that is. And it's saying that's what your max is. It doesn't say in here what your max is specifically necessarily if you're an S-Corp. But I think like an S-Corp employee, it doesn't say like whether you would fall under employee or owner compensation. Based on, though, my experience with the other rules that they had outstanding where owner pay was limited, and it may actually be, mind you, I've had about 30 minutes to review this stuff, so it may actually be in here somewhere. So I need to caveat that really quickly for everybody who's listening is this is brand new, so I'm still reviewing it, but I had this live scheduled, so I wanted to go ahead and do it. But I believe your forgiveness, and you know what? I'm actually just going to check. I'm going to look at the forgiveness application really quickly here and see if it talks about owner pay anywhere as far as limits there, because previously your owner pay, even if you were a owner of a corporation, your owner pay was also capped. Whereas for employees, if you're employing someone, it's not capped outside of the 100,000, right? It's otherwise you can give people more than they normally would make. So I think they will probably do the same thing for owners. Let's see. So it says if a 24, yep, here it is. Okay, yep, here it is. If a 24-week, this is on the certification piece, so you have to certify a ton of stuff. So remember, the onus is on the borrower to prove all of this, okay? So when you're applying, the bank is going to do a little bit of due diligence, but really you're signing your life away here to say, yes, this stuff is correct. If a 24-week covered period applies, does not exceed, so this starts with the dollar amount for which forgiveness is requested, does not exceed 2.5 months worth of 2019 compensation for any owner, employee, or self-employed individual general partner, capped at $20,833 per individual. Okay, so it's capping you at the 2.5 months. It's going to cap you. And so when this says owner employee, that's talking about S-Corps and C-Corps who typically have an owner employee. It's talking about W-2 wages that you pay to yourself. Because remember, if you are an S-Corp or a C-Corp and you pay yourself, you can only W-2 wages that you pay yourself are going to be eligible for forgiveness. And they're going to cap that based on 2.5 months worth of 2019 W-2 wages if you're a corp, or 2.5 months worth of 2019 net profit if you're an LLC or a sole proprietor or independent contractor, self-employed, whatever you want to call it. So those owner pay requirements are still there. There are still limits, but employees, you can pay them more than you typically did if you want to. Okay. All right. I hope that makes sense. So that was a big one that we were waiting on, which is what are they going to do with owner pay? What are they going to do with owner pay for self-employed people? What are they going to do with owner pay otherwise? Let me show you the easy application. So this is something that will make it really easy. Essentially, self-employed people, you have a quick form to do. Let's see, where is it? Here it is. You have a quick form that you're going to fill out. Look, it's basically the first page of that long 11-page forgiveness application. It's basically just the first page because you don't have employees. And then you got to make all your certifications as well and sign your life away too. And there's a couple of reasons you can do the easy. So even some of you who are employers can do the easy form. And I'm going to tell you here in a minute when you could do this. Okay. So, but basically for you guys, you're going to fill out just this form and it's going to be pretty quick. And especially if you got that 2.5 months of payroll, if your loan was calculated correctly by your bank, then it's basically going to be check the box. You put all the information into your payroll costs, right? Because your payroll costs are essentially your costs as an owner to pay yourself. And that's it. You'll meet requirements for full forgiveness. Woohoo, right? Your EIDL advance it's still in here. It does say your EIDL advance gets subtracted off of your forgiveness amount. So if you were forgiven, let's say for the max, which is $20,833, if that was the total amount of your loan, and you get forgiven for that entire amount, but you had a $1,000 EIDL advance, you will get forgiven for $19,833. That $1,000 then becomes a loan under PPP terms, 1% interest over probably 2 years, depending on when you got your loan. It's now 5 years for people who are getting their loan now. But it's very cheap money, or you could pay it back right away if you really didn't want to have that loan outstanding. So, but it is super cheap money. If you wanted to keep that EIDL advance, you can. It just becomes a loan. So, okay. So hopefully this makes sense. Let's talk about how you can do the easy form, because who doesn't want to do this easy form, y'all? Who doesn't want to do this? I feel like all of y'all should want to do this. And I'm going to tell you, there are things that you can do, especially if you're still within your covered period or you decide to do the 24 weeks, that you can do to be able to do the easy form and not have to go through the whole rigmarole of looking at every single one of your employees necessarily. Now, you still would have to do that, but you don't necessarily have to turn all that information in and go through the whole thing. Okay, let me read some of these and then I will come back to it. Let's see. Well, I think you guys are talking amongst yourselves, so that's good. So is it too late to apply for PPP for LLC owners if you did not include yourself in your original application? I got PPP for my employee, but not for myself. So yes and no. You cannot add, you can't get a second one. So if that is still outstanding, you can't get a second one. Now, talk to your bank and see, because you may be able to return the one you got and get a new one calculated the right way. Now, there's some risk there, because what happens if the funds run out or, you're delayed somehow and then you don't get one at all? So it's your decision on the risk piece. You can talk to your bank about that. But theoretically, you should be able to return it. They should hopefully quickly deactivate your ETRN number that will allow you to get a new one. But there's no guarantees, especially around this stuff. Okay. But yes, those of you who gave it back, maybe can apply again. And the time starts when you get that second one. Okay. So this is a video. It will be in the Facebook group if you're watching me there. It's also going to be available on YouTube if you want to watch it over there. And if you watch it on YouTube, you can like 2x me and I can talk really, really fast, which you don't really need to do with me because I talk fast anyway, but in case you really wanted to. Okay. All right. Here's what I would say. Okay, this is a great question. I love this question. I haven't applied for any yet. I was about to apply for PPP. Now EIDL is open. So which one should I go with, or can I do both? Independent contractor, not getting unemployment. Okay. It depends on why you need it, right? Personally, I think PPP is better because it's forgivable. EIDL, you get a forgivable advance, but you know, it's usually limited. If it's just you only get $1,000. So do the calculation. Take a look at what your net profit is, divide that by 12 and multiply it by 2.5 and see how much you come up with. That's how much you'd be able to pay yourself if you get PPP, okay? For free. It's yours. So, you know, I would do that calculation and see how it comes out. Now, if it comes out to like $600, like if you took a ton of deductions last year, you don't have much net profit, then maybe just go with the EIDL advance because that's going to be better. But if you end up with like $10,000, that seems a heck of a lot better than the $1,000 EIDL advance. And if you get PPP, you're going to have to subtract your advance anyway, so it doesn't really make sense. I don't love using EIDL to pay yourself, right? EIDL for me, I would much rather you pay operating costs with it. Financing, while you can pay yourself with EIDL, there are some limits, right? As a self-employed person, you don't want to pay yourself more than what you were paying yourself previously, et cetera, et cetera. But the thing about paying yourself with EIDL money as a self-employed person is that you're financing your own paycheck. And that's not actually you're gonna have to pay that back with interest. And that interest, while it seems like a low rate, you guys, over 30 years, like that's a lot of interest. It's a lot of debt. So I typically say like EIDL is best for businesses that have a lot of operating costs that PPP or PUA do not help them with. Okay. So that's where I think EIDL is best used. If you're trying to get something to pay yourself, the best thing to go is either unemployment through PUA, PUA, or PPP, or you know, some combination of both. And there are still some questions. This is one thing that has not been answered, and I'll touch on it right now, which is timing of PUA and PPP, and how does this work now with the 24 weeks, right? Because it was like, okay, you had 8 weeks, and you either had to claim your PPP money on your PUA, or you didn't certify for 8 weeks while you took it. Well, now that it's 24 weeks, what does that mean? I still don't know the answer to that question. So I'm going to talk about that. I have some thoughts, and I've talked with some other CPAs, I think right now about this, that people just have differing opinions about how this works, right? But suffice it to say, I would think, right, caveating this, that, you know, still waiting on guidance, and others might have different opinions, but I would think that you could say, look, I'm paying myself for 2.5 months, but I'm going to get that PPP now and pay myself for August and September, right? And then take your PUA with the full extra $600 through then. This is assuming you're not working, right? Like if you're working, that changes things. Or you can time PPP and start taking that when you start ramping up. So when you would not be eligible for PUA anymore, which might already be now for some of you guys, if you're making too much, right? Then PPP is great to kind of ramp up to help you as you're getting your big business back to where it was. And you can make money and have PPP. You don't have to be out of work. I think that's a misconception as well, that people think it's like unemployment where you can't be working. No. This is money you get to keep even if you're also making money. So regardless of whether you're making money or not in your business, you can use PPP to pay you at that full 2.5 months payroll. Pretty cool, right? Like I recommend PPP. I think it's great for self-employed people to pay themselves. And it's going to be super easy now to actually apply for forgiveness and get full forgiveness. So now a lot of those kind of question marks that we had around it and some of the frustrations we were worried about, they've kind of taken that off the table with some of this. Okay. No, you cannot use PPP to pay taxes for 2019. PPP can only be used for payroll, business rent, business mortgage interest, business utilities. That is it. So even if you don't apply for forgiveness, that is it. Okay. Yes, here we go. Great lead in. I can't see who you are, Facebook user, but great lead in. What reasons would there be for using the regular forgiveness application versus the easy application? Mainly if you don't qualify to use the easy. And I'm going to tell you guys, I want all of y'all to qualify, and we're going to talk about how you can all, well, most of you, hopefully we can get you to qualify. Here's the thing. Y'all have probably heard of safe harbor, right? We've talked about safe harbor. There's a couple of different safe harbors, meaning, so it gets a little complicated when you're doing these calculations. The reason that the application, I'm going to show you the full application is what it is, right? So we've got a ton of different pages. The reason, you don't have to look at all this, but the reason it's so long is because there are some things that make it complex. And the things that make it complex are the fact that you have to do averages over a time period, right? So your FTE calculation, full-time equivalent, right? Number of employees that are working for you. That is one of the key things that is critical to forgiveness, okay? So the thing about that is typically what it was is you could pick, essentially there are multiple different reference periods you could pick. So you could pick January and February 2020. You could pick a period from 2019, right? So there's a couple of different time periods that you could pick to look at your FTEs previously before COVID. You know, your before COVID FTEs and your after COVID FTEs, right? And you would average it over that time period. So you'd have, let's say you chose January and February 2020, right? And you average it over that time period. And then you say, okay, well, full-time equivalent employees, remember, if they're a part-time employee, they can count as 0.5 automatically. That's in the application as well. Or you can actually say, well, they worked 25 hours out, you know, and a full-time employee is defined as 40. So you'd come up with kind of the percentage, and that's how many FTEs they would be. Anyway, it's a complicated calculation over that time period where you're averaging by pay period how many FTEs you have in total, right? Easy if you're not changing your FTEs, but if you have hourly workers, it can get a little bit, and you tried to do like the exact method, it can get a little bit complicated. And then you're going to compare that to your covered period, which used to be the 8 weeks following when you got the loan, right? Now we have the 24-week option. So this was something I was waiting to see as well, which was, okay, how are they going to handle the FTE calculation? Is it going to be an 8-week period during the 24 weeks? Because some people thought it would be, or is it going to be, let's say if you decided to use the loan funds in 12 weeks, right? Could you use just 12 weeks? It doesn't look like it. Based on my read of this application, unless they come out with something different, the covered period is either 8 weeks or 24 weeks, which means that if you choose 24 weeks, when doing your average FTE calculation, you'd have to average your full-time equivalent employees over the full 24 weeks. So some of y'all were like, wait a second, but I was planning to lay off people because I still don't need that many people. I don't need to keep that headcount up. My business has gone down quite a bit. What's the deal here, right? And yes, you would average it over the full 24 weeks, even though you only got 2.5 months worth of payroll, right? The rest of it, you're going to have to foot yourself. So that's one drawback of the 24 weeks is that calculation, right? But here's sort of, they put a lot of caveats into this safe harbor. So what safe harbor is, it says like, okay, even if your average, when you average over the full 24 weeks or 8 weeks or whatever you choose, is less than the average over your reference period. So maybe you used to have 10 employees and now you average out to 8.5, right? Normally that 1.5 that you were down, you would have to basically proportionately reduce. In that case, it'd be about 15% of your forgiveness would be reduced because you didn't hire back to that level. Now, they already had a couple of different caveats in there. Like if you tried to hire them back during the forgiveness period and they wouldn't come back because they didn't want to, or or they asked for a reduction. So like a full-time person became a part-time person. If it was voluntary on their side, you could already get some insulation for that. It wouldn't count against you in your averaging calculation. But now what they have done is essentially made it such that you really are going to want to get safe harbor. So what I mean by safe harbor is that calculation is complex, and it's not going to be fun for anybody to do. That whole calculation of FTEs, especially if you have hourly employees, if you have a lot of employees, and you've kind of changed, like you had employees, now you didn't, and now you hired them back and all that. I want everybody to try to get safe harbor. Safe harbor basically says, okay, regardless of what happens, if you average it out and your average is way down from what it was, right? Normally your forgiveness would be reduced, as long as you have rehired back to your previous level, right? Your previous FTE count. By previous, it means February 15th is usually the date that they anchor back to, although there's some differences in the new application that I'll get into, but typically it's February 15th. As long as you kind of hire back to that level, then woohoo, you don't have to worry about what happened during that 8-week or 24-week period because you got back to the level. Now, the date of that used to be June 30th. Now it's December 31st. Okay. And this was something that I've been waiting for clarification on as well, which is, so wait a second, what if their covered period ends in September? Does that mean you got to wait until December 31st? You have to keep your employees on payroll that whole time to be able to keep safe harbor? No. So one of the things that I found in the new forgiveness application that was different. So this is, again, there's 2 different safe harbors. I'll go into the other one in a minute. But one of the safe harbors you can get is this. How come, like, really though, can we just take a minute to say, like, you make it easier and then you make it harder? Like, just why does it have to be this hard? I can't even, I could go on. Okay. So don't even pay attention to this because to walk through that safe harbor is kind of crazy. Use my tracker, balancecfo.com/PPP tracker. New one will be coming out soon. Use the tracker because it goes through all of this. But enter the borrower's total FTE as of the earlier of December 31st and the date the application is submitted. So basically what that means to get safe harbor, and you can't submit the application until after your covered period, right? If you're an employer, you have to wait till after the 8-week or 24-week period, whichever you choose, then you can apply for forgiveness. Okay, you have 10 months to apply if you wanted to, but you probably want to do it pretty quickly. And so let's say you were done in September and you had hired back, like maybe your average was under, but by the end of your covered period, you were back up to your old FTE count. Okay. Then you could submit the application. You probably want to submit it pretty quickly, especially if you're considering laying off employees after that time period, right? You probably want to submit it pretty quickly because then the date that that's submitted is the date that counts as kind of like your safe harbor day. Okay. So I think some people were talking about laying people off. Like, okay, if you lay people off, don't wait a month. Don't lay people off and then wait a month to do your application. So really, like, if y'all are hearing this, right, what really matters is how many employees you have on your payroll and how much you pay them. Because remember, we can't reduce how much we pay them by more than 25% hourly wage or average annual salary, right? It really almost, if you can get safe harbor, right? That's the key, is making sure that you get back to that by the date of your application or by December 31st, whichever is first, okay? And then if you do those things, you should be able to use the EZ form. And I'll show you, there are some exceptions to that, but I'll show you exactly why. So that's really the thing, is that I think instead of having to worry about this crazy calculation that you're going to have to do, both for the average pay that you pay them and the number of FTEs, is try to get safe harbor. And there are more examples now for how you can get safe harbor. So let me look at FTE safe harbor 1 up here. Okay, if you guys can read this. FTE safe harbor 1, I don't know if that makes it easier or harder to read. If you were unable to operate between February 15th, 2020 and the end of the covered period at the same level of business activity as before February 15th, due to compliance with requirements established, this is the key, due to compliance with requirements established or guidance issued between March and December by the Secretary of Human Services, Disease Control, OSHA, related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19. This doesn't say like if your business just did not come back to normal because, customer demand was down or something like that necessarily. But it does say if you have to, like if you're a restaurant owner and you can't take you can only take half the number of tables you normally could, right? You could check that box and get safe harbor and say, oh, actually, I can't get back to normal operations, so I can't hire back all my employees because that would be silly, right? To hire back my employees when I have half the amount of work to do. Things like that. So if hiring back employees, like if you're, in any of those situations where hiring back employee doesn't make sense because of these health and safety rules and social distancing rules that you have to have, and therefore you don't need it as many employees, then you can get safe harbor regardless of anything else. So that's kind of like the first one to go through is that safe harbor. Then you go through the safe harbor of, okay, if you don't qualify for that, let's do the FTE comparison. But there are, if employees don't come back for a lot of different reasons and you can't rehire, you can document that and kind of get out of it. So I want everybody, instead of like worrying about the average over the time period, right? I want y'all to go for safe harbor because that's going to be the easiest thing. It's just going to be the easiest. The average over the covered period, compared to your reference period only matters, y'all, if you can't get safe harbor. So just get safe harbor and, feel better about it. And then you can wait to hire back employees if you want to, or you could lay them off in the middle. Like if you started your time period, you got PPP a while ago and you started and you're like, I don't really need employees until August, but I've been paying them anyway. You could lay off, technically hire them back in August, use the rest of that money, right? Use the full amount of your PPP money on payroll. Make sure you hit at least 60% because that was one change as well that came out with the PPP Flexibility Act. It's not 75% anymore. You want to hit 60%, although there is proportionate if you go under. And you can hire them back later and then not worry about what happens during that like covered period if you know you can get safe harbor. If you don't think you can get safe harbor for some reason, right? If you don't think you can get it, you have to then worry about what goes on during that time period. And that was when we talked about like, okay, you got to hire employees back really quickly after you get it, and you need to pay them their wages that they were making, et cetera, et cetera. Okay. So really like that last pay period, I would say like that last covered period, that last week, maybe in your covered period, make sure everything is like you've got all your employees back, you're paying them their normal wages, everything's good. You can check that box and hopefully do the easy form, right? And then apply for forgiveness right away, and then do whatever the heck you need to do, right? Like I think that's what we all want to do, is just be able to get forgiveness and move the heck on, don't we? I think that's what we need to do. So that's what I want to coach you guys on, because I do think it gets really complicated on, trying to understand all the requirements now and keeping your head count up for a full 24 weeks. Like that sounds crazy. For some of you guys, that might not be hard if you're back in action, in full action now, but a lot of people are still not. So, okay, real quick, before we finish that, I want to go over to the easy calculation instructions. So again, treasury.gov is where you can find all of this. Read it. I know it's not fun, like it's not exciting reads, but read it because you might pick up on new things. Again, I've spent all of 30 minutes looking at this morning. We're kind of doing this together. I will come back and be doing more videos. So if you're watching me on YouTube, make sure that you subscribe to this channel because there will be more videos that will go into more specifics. I know I'm covering a lot in this amount of time, but I just want to get some of the highlights in so that you guys know what is going on. Okay, but PPP loan forgiveness application. So here's the key. This is the instructions for the easy form. You can see a couple different checkboxes. Let me make this a little bit bigger for you guys to see it a little bit better. So there's a couple different checkboxes you can get, right? So either and they're all kind of separated by these lines. Either, you get safe, or you can use easy because of this reason, because of both of these, or because of both of these. So let's go through those. You can use the easy form, which remember, the easy form is one where you don't have to go through the rigmarole of going through like the FTE reduction quotient, blah, 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 calculation, crazy salary wage reduction, all of that noise. You still need to have calculations that support it available, but you don't have to present a lot of that information as you would if you were doing the full form application. But self-employed individual, independent contractor, sole proprietor who had no employees at the time of the loan application and did not include any employee salaries in the computation of average monthly payroll in the application form. So even if you hired someone, like some sole proprietors actually decided to hire somebody to use some extra of their money, that's totally fine. You can still use the easy as long as you didn't have employees when you applied and you didn't use any kind of payroll from employees to apply for the loan. So you guys get to use easy. Woohoo, that's exciting. Then the second option though, so for my employers, the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period or alternative covered period. You basically get a choice between aligning it with your pay periods or not. I've talked about that in some other videos as well, but we can go into that at another time. Compared to the period between January 1st, 2020 and March 31st, 2020. Okay. So it's basically saying you know, when you look at that January to March timeframe, your annual salaries. So if you have a salaried employee, you haven't reduced their annual salary. Okay. If you have an hourly employee, you haven't reduced their hourly wages. In the interim final rule for both of these, in at least one place, and this is the one that was issued on the May 22nd, it does say base annualized salary or hourly wages. So a lot of people were questioning, like, does this mean I need to keep up with commissions and all of that? My interpretation, and I will disclaim the fact that this is just my interpretation. Different people will interpret this differently. My interpretation is you need to keep base wages the same, right? Versus keeping up with tips and commissions and all of that. If those have gone down, as long as their base wages have been kept consistent, I believe you should be able to say yes to that. Okay. So I think it gets really complex when you're trying to figure out, like, okay, what was their average wage? Like, we need to simplify that and just say, okay, what did I reduce their salary? No. Did I reduce, their hourly wage? Probably not, right? What probably happened is maybe they made less in commissions or something like that. And mind you, we'll get into here in a minute if their hours went down, how that impacts the calculation, but that's separate from this. So this is like dollars per hour, like $12 an hour is what I used to pay them. That's what I'm paying them now, right? So that's the first part, is as long as you can say, okay, I didn't reduce their salaries or hourly wage by 25%, woohoo, check mark. But you also have to be able to say, and this one throws me for a loop. So I'm curious, like, I want to do a little bit more reading and seeing what other CPAs are saying. I had a conversation with a few of my favorite CPA friends who are probably on here, Kelly and Bree and Hannah, this morning about this specific clause. But it says the borrower did not, and I'm right here, the borrower did not reduce the number of employees or the average paid hours of employees. This is getting at the FTE calculation, you guys. Average number of employees or average paid hours of employees between January 1st and the end of the covered period. Remember, the end of the covered period is the end of your 8 weeks or 24 weeks. Ignore reductions that arose from an inability to rehire individuals who were employees on February 15th. So now we're adding another date in here. If the borrower was unable to hire similarly qualified employees for unfilled positions on or before December 31st. Also ignore reductions in an employee's hours that the borrower offered to restore and the employee refused. So this goes with, like, if you ask them back and they said, no, I don't want to do that. Okay. All right. So here's the bone that I have to pick with the way that this words. And some of you guys are probably scratching your heads as well. Cause I've talked to a couple other people that were like, yeah, this one was throwing me for a loop. When I first read it, I was like, okay, the borrower did not reduce the number of employees or average paid hours between January 1st and the end of the covered period. Well, of course you did, right? Like, somewhere in there, you probably laid people off, reduced their hours, shut down. Like, of course. I don't think that's what that means, right? I don't think it's saying, like, at some point during this, did you lay people off? Because then that ignore reductions that arose part, where it's talking about if you couldn't rehire people you had laid off, right? I think what this is literally saying is take what the number of employees you had as of January 1st, right? The number of FTE, and compare it to the end of your covered periods, that last payroll period in your 8 weeks or 24 weeks, right? And do you have the same number of FTEs in that? Do you have the same number of employees? And when you work out the hours, right? Like, are they working basically back to the same number of hours that they were? That should be the goal. That should be the goal, you guys. Because if you can say yes to that, you can go, like, woohoo, safe harbor. I don't have to worry about that jazz of this whole, like, calculation you would have to do to determine your FTE over the reference period versus the covered period, which is a nightmare. Also, something that is in the tracker that we're updating, balancedcfo.com/PPP tracker. It's free, y'all. We spent a lot of time on that. Go download it. You'll get the new one soon. But, if you don't want to do that, right? Like try to target to make sure that that last pay period is equal to back what you had at January 1st at least. And then you can just check the box on this and be like, great, awesome. I can use the easy application form. And life will be so much easier for you. The banks want that too. They're not gonna, the banks want you to use the easy form. It makes it easy for them too, okay? They want you to be able to say yes to these questions. So just try as hard as you can to be able to say yes to them, regardless of what you do in the interim, right? Now, again, like disclaimer on all of this, but this is, if I were talking to a friend, this is what I'd tell them to do. I'm talking to like 400 friends right now. Okay. And then the last option for being able to use the easy form is essentially the exact same question above, that you didn't reduce annual salary or hourly wages by more than 25% when you compare January 1st, like the January 1st to March 31st, during that time frame in the end, right? And also the borrower was unable. So instead of this whole thing about FTEs, like maybe you couldn't get back to your FTEs, right? For some reason, the borrower was unable to operate during the covered period at the same level of business activity as before February 15th. Okay. Due to compliance is the same thing, right? Due to compliance with essentially all the different health departments, OSHA, et cetera, that basically says you need to have social distancing and sanitize, blah, 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 blah. Right. So if that was the reason, you can check that, even if you didn't get back to your FTE previously, right? So some of y'all may know that that's the case already, that you would be able to fall into that, just depending on what's going on with your state. But ultimately, it gives you 3 different options to be able to use this easy form. If you can do this, if you can like intentionally manage the funds such that you spend it correctly, right? 60% on payroll, at least. You can spend 100% on payroll unless you're self-employed. Well, no, now you can't actually. I take that back. I've been saying that for so long. It's like, my nature. But yes, you can actually take the whole thing as owner pay now if you're self-employed. But you can use the whole thing on payroll. It's not that it's only 60%. But if you want to be able to use 60% for payroll, 40% for rent, utilities, et cetera, you can still do that as long as you use the money as you need to, and you can check off one of these 3. It's going to make applying for forgiveness so much easier, y'all. So much easier than going through the whole thing. So that is my takeaway from all of this is please fall into one of these. And I think that they're adding these because they want people to fall into one of these exceptions because it makes it easier for us, the banks, the SBA, everybody. But remember, if you don't qualify, don't say you do, because you're signing your life away on these things. You're certifying all of this information. You do have to keep all that information to back up these certifications. So you don't have to actually give anything to necessarily here. I'll show you what you have to give. Back here, it tells you what you have to give. You still give documentation for payroll, et cetera, and non-payroll costs that you had. But here's the documentation that each borrower must maintain, but is not required to submit. And that's basically the documentation that you met safe harbor. So the documentation that you did, you have support for the fact that you are able to get safe harbor, that your FTE came back to normal, et cetera. And you basically have to keep it, I think it says for 5 years from the date after, here it says, 6 years after the date of the loan is forgiven or repaid in full. And if they request that information, you'd have to give it. So they're going to be looking at these for a little while. So make sure that when you're certifying that, you feel pretty good about it, right? That you do fall into this category, but try to get safe harbor, y'all. That's the big thing. Okay, so that was a lot. I just talked about PPP for a while, and I do want to talk about EIDL here for a minute, but let me really quickly. So no, rent also. So this was a question too. Is it only payroll that's been extended to 24 weeks? No, all of it. You can use it for payroll, rent, utilities, et cetera. Remember, payroll has to be 60% though to get the full 40% for rent and all of those other things. Okay, let's see. So some of you guys are talking to each other, so it makes it hard to, let's see, to go through how. So go ahead and ask me your questions on PPP if you have them. I'm not going to go all the way back through because there's a lot of comments and a lot of you guys are just chatting with each other, which is great, and answering each other's questions. I talked about this a little bit. So you can use it over less, but if you if you don't get safe harbor and you chose the 24 weeks and you only used it over like 12 and then you laid people off, if you don't get safe harbor, that's going to impact your forgiveness, right? Because you didn't keep that FTE count for the full 24 weeks. So that could impact your forgiveness. Now, if you get safe harbor, you don't have to worry about it. So that's why I keep telling you, just try to like strike one of these boxes so that you can get safe harbor, okay? Let's see. So I'm curious to see how this rolls out with the banks. I don't think so. I think you're going to have to wait till the end of your covered period, because otherwise you can't really, it would be hard to actually meet this, because you can't necessarily say what your FTE count was at the end of your covered period. We'll see what the banks come out with on this, though, to see if they're going to say, okay, well, if you're ready to, submit after 12 weeks or 14 weeks or whatever. But my assumption is if you choose 8 weeks, you can do it after 8 weeks. If you choose 24, you got to wait till the end of your 24 to be able to apply. But we will see and check with your bank. Most banks don't have a process yet. They're probably now going to get this process in place. So safe harbor is not something new. They've had it. So this was the June 30th date that was like, okay, as long as you rehire by June 30th, you're good, right? Now it's December 31st, or according to this, the date of your application, right? That's now the new date. And there's a couple different safe harbors. So it does but basically it's just saying there's a lot of calculations you have to do, unless you can basically check one of these boxes that you get safe harbor. So that's why I'm talking about that a lot, because I think that's something we really need to be honing in on right now. Do we have to apply all over again for PPP? If you have it, you don't. No. If all of this applies, the 24-week extension, you can elect that even if you already have PPP. So it's 8 or 24 weeks. You don't have to reapply to get a new one. The only change that they made in the PPP Flexibility Act that isn't automatic to the people who already have PPP loans is the 5 years. So now any unforgiven amount, previously it was over 2 years you had to pay it back. Now for new ones that were after June 5th, it's automatically 5 years, but you may be able to work with your bank about extending that even if you got one before June 5th. Importantly, you only could choose the 8 weeks if you got the loan before June 5th. June 5th or 6th. I think it's the 5th. If you got the loan after that, you have to use 24 weeks. That is the new requirement. I actually wouldn't. I would actually say the 24 weeks, because then you can pay yourself the whole amount. So here's my thing about a sole proprietor and LLC. And I promised myself I wouldn't get into this, but I'm going to touch on it and confuse everybody right now. But so PPP itself is not taxable. Okay, PPP, as like when it's forgiven, it's not taxable income to you, which is awesome, right? Except the IRS came out and said, yeah, okay, it's not taxable, but anything you deduct that you paid with those PPP forgiven funds, right? Like if you paid rent or payroll with those funds, you can't deduct those on your taxes. So it kind of like backdoors it back into kind of being the same thing as if it were taxable income. But, right, if you're a sole proprietor, here's the caveat. Don't lose me, you guys, but here's the caveat with a sole proprietor. You do deduct things like rent and stuff like that on your taxes. So if you have it, you could use PPP to pay for that if you've got business-related rent, utilities, that kind of thing. But then you couldn't deduct it on your taxes, okay? If you use the whole amount, now this is just my sole proprietors and LLCs, if you use the whole, and independent contractors, if you use the whole amount to pay yourself, right? If you use the whole 2.5 months to pay yourself because you picked the 24-week option, that's not a deduction on your taxes anyway. That's not how taxes work for sole proprietors and LLCs. You don't deduct your own payroll to yourself. You just pay on profit. And that money, because it's not income, isn't going to show up in your profit. So to me, if I were to choose where I spend the money, the official usage, regardless of what you actually do with it, right? The official usage as a sole proprietor and LLC should be owner pay of the whole thing, should be owner pay, right? And they should not ask you for proof of actual, like, that's another question I get all the time from self-employed people is, do I need to how do I pay myself? Ultimately, it should be a calculation. On here, and we can see, let's check the easy form right quick. Let's check down here what it asks you for, because I'm betting it's not going to ask you. So eligible cash compensation, let's see, bank account statements of third-party payroll services for paid to employees, okay? Sole proprietor LLC, you're not an employee of yourself. Tax forms, great. Payment receipts, canceled checks. Yeah, I mean, it's not going to, or account statements documenting the amount of any employer contributions to healthcare, great. So you should not have to give any kind of like support for payments to yourself as a sole proprietor LLC. If you're a corporation, you absolutely do. But if you aren't, you don't. And the reason for that is because you don't pay taxes off of that. It's not how taxes work for a sole proprietor LLC. So what if you needed that money in your business, right? All you would do is pay yourself a paycheck and then put it back in your business, which is silly. So the forgiveness for you is a calculation, right? It's a calculation based on your Schedule C net profit. So I would choose the 24-week option anyway, and I would use the whole amount as owner pay for yourself. I think that's going to be best. It's going to be most tax advantageous to do that rather than use it for other reasons. Okay, let's see. So must we pay ourselves our 2019 weekly salary? Okay, so again, like it doesn't matter how you actually pay yourself, or even if you actually pay yourself, you're a sole proprietor LLC. Could some banks get this wrong and randomly ask you for proof of payments to yourself? Yes. Some banks will 100% do that, which you may have to explain to them like, look, I actually don't have to do that. That's not a requirement. But if you want to, it would be best practice to go ahead and like document that. You don't have to pay it to yourself because it's only 2.5 months worth of pay. So you don't have to divide it up into 24 weeks like that. Really, it's only 2.5 months. So if I were to guess, I hate guessing. Why am I doing this? I should not guess. But the question that I keep getting, which is certifying for PUA versus PPP for a sole proprietor. Unless they come out and say, your clock for PPP has to start as a self-employed person when you get the money, which they haven't said. They just said you can pay yourself a max of 2.5 months. I would put that off and say, okay, well, the first, 10 weeks or whatever makes sense for you. I'm going to stay on unemployment if you qualify, right? If you qualify, if you're not working, if you aren't making money right now for any reason, if you're shut down, keep taking unemployment and then pick up PPP for that last 2.5 months, or maybe start PPP clock and I think it's 2.5 months, right? Pay yourself that 2.5 months, but start it when you are ramping back up, if that makes sense, if you're ramping back to where you were before. So that's kind of what I would do to try to time it out. Now, for those of you who have already started and are doing it under the 8 weeks, I don't know, it really depends. It really just depends on the state and how they're going to handle this. It's unfortunate because a lot of you guys have been claiming PPP as you should have been on your PUA applications, and they've been maybe reducing them, or you haven't been even getting it because PPP was paying you too much, right? And now you're like, well, wait a second, with these rules, I wouldn't have had to do that. And that is super frustrating. And that's part of the frustration of this thing and the fact that we're building an airplane in mid-flight right now. And I feel you on all of that. Believe me, believe me. Let's see. Okay. Yeah. So, well, here's the, So here's the reason they haven't made really strict rules around this is in the first place, they really didn't. They just said PPP will likely impact or something like that, your PUA applications. But they weren't really clear on how that would work. And part of that is because it kind of depends on the state and the state's interpretation. And we know how that's going right now, right? The state's it's impossible to even get anyone to answer your question on there. Okay, people are saying S-Corp owners. So I talked about that a little bit before. You're limited to 2.5 months worth of your payroll. So S-Corp owners as well, you can pay yourself 2.5 months worth of 2019 W-2 wages. That's my interpretation, is that it's W-2 wages only, because that's what you could also use. That's your compensation for working in the business. So 2.5 months worth of that. So take your 2019 W-2 wages divided by 12 times 2.5. Okay, that's how much you can pay yourself and be forgiven. You can pay yourself whatever you want, but that's the max you can be forgiven, up to a maximum of $20,833, which is 2.5 months of $100,000 annualized. So if you made over $100,000 in W-2 wages, you have to cap it at $100,000. So that is how it works for S-Corp owners, according to the forgiveness application, which is what I would expect. For employees that make over 100K, I received 2833, but could only pay them 15,384. So you can actually pay them the whole amount. Yeah. So because it's now over 24 weeks, what did this say? Let me go find it again. I think that was on the certification. So I believe, oh no, I think that was in here. I believe the max now, yep. So for 24 weeks, a maximum of $46,154 per individual, not the owner. You guys are maxed out at 2.5 months, the 23,833. But your individuals, you can pay $46,154. That's the max for those that make over 100K. So, and this is a good question. I don't know if you can just take it over the 24 weeks and maybe it'd be so small that it wouldn't actually impact your PUA. I think the main thing with this is going to be documentation and making sure that somehow you documented this. There are some CPAs out there, and I have heard them that have actually taken an interpretation to say, well, because it's not taxable income, then you don't have to claim it on PUA at all, which I don't think is in the spirit. I would be very careful advising people on that because I don't think that's in the spirit of what they're trying to do. They've even said multiple times that really the purpose of PPP is to get people off of unemployment. So it depends on your risk tolerance though. So whatever you decide to do in the absence of guidance around this is just document it. Document it. If you tried to call, right? If you're trying to call your unemployment office and ask, and you've been, if you called them 17 times and nobody's picked up, right? Document that. Document the days you called, when you called, what happened. If you got a hold of somebody, document the answer to your question. If you didn't, document that. Document what you decided to do, right? Like, okay, I decided to take my PPP over 24 weeks and claim that on PUA, or I decided to take it just over 8 weeks or just over 2.5 months, and I started it on this date. Document what you do. Because if I wonder how this is all going to go at the end of this, if the states are going to try to reckon all this out, right? It's not going to impact, taking PUA does not impact PPP forgiveness. They don't ask that question, but could you be required to pay back that PUA and potentially with a fine or a penalty? Maybe. So it just depends on if the states kind of decide that they're going to go after people for this stuff and ask the question and kind of get their act together. But right now we just don't know. So you got to do what's best for what makes sense to you and just document it. Okay. You're welcome. Thanks, Taitlin. Thanks, Taitlin. Yes, for EIDL, they should have given everyone 10K. I agree. Some congressmen also agree. Okay. Let's see. Okay, so let me really quickly talk about EIDL, because some of you guys came here to hear about that and you're like, yeah, PPP, not doing that, or not interested. Tell me more about EIDL. EIDL is back open for business, y'all. So if you missed the first round, now if you've already applied for it, don't apply again, okay? Even if you're still waiting, it'll get to you. If you haven't applied for EIDL, you are going to want to go do that. Go to sba.gov. I have it linked in my Facebook page. Again, Financial Literacy for Women Business Owners. Come join. Even if you're not a woman, come join us over there in my Facebook group. But you can go apply, and there's a short application. It's the same application, I believe, that they had before. Make sure you check the box for the advance. You would get an advance of $1,000 per employee. Remember, though, if you get PPP, that advance is going to be subtracted off the total PPP forgiveness that you are eligible for, okay? So when they figure out, like, okay, you're eligible for full forgiveness or partial forgiveness, they're going to then subtract another whatever amount it is, $1,000 per employee that you put on the application. Okay. Okay. So maxing out at 10K. So that's what you end up getting for EIDL. It's open to all kinds of businesses. That can be, it is a loan application. So importantly, a lot of people go into it thinking it's just a grant application. It's a loan application. More than likely, they will pull your credit. You will likely get the advance. I think it keeps changing how it's working, right? So some of you guys know, like, some people got the advance first and then the loan. Some people got the loan at the same time as the advance. Some people got the advance 10 days after the loan, which makes a lot of sense. It's an advance and you're getting it after. I don't understand. It's been changing continuously. A lot of people who were rejected before. So if you got a rejection, you want to file for a reconsideration, because a lot of people are getting reconsidered. A lot of people. EIDL, though, like I said, best for companies that have operating costs. Although even if you don't, you can apply and go ahead and get your advance and then just not take the loan if you don't want it. If you get the invite to the portal, just don't log in. don't worry about it, right? If you want that loan, it is a loan. It's 30 years, 3.75%. If you do EIDL, get my EIDL tracker and calculator. It's got an interest calculator that actually calculates out the interest that would be due. Interest is still accruing even though you don't have payments for a year. So remember that. balancecfo.com/EIDL tracker. So my PPP is PPP tracker. EIDL is EIDL tracker, balancecfo.com. Go grab those. They're free. And I will email them to you. And that, so with EIDL, I would mainly use it for operating costs. You can use it to pay yourself. A lot of questions around whether you can use it to pay taxes. So there isn't an answer. And I've talked to several people that have varying different opinions on this. Here's my thing with EIDL. The best thing you can do is use it to pay for things that are obviously things you can pay for. Right? So you can't use it to pay for expansion. You can't use it to pay for fixed assets like cars and machinery and repairs and maintenance, right? Make sure, because I get inundated with those questions of, can I use it for this? Can I use it for this? If you have, there's no time limit. You don't have to spend EIDL over a certain time limit. Use it for business insurance and inventory. And, there's so many just general operating office supplies and general operating things you would normally have, right? Just use it for that. And then other money doesn't mean you can't do repairs and maintenance. You would just use other money, like money that you're making in your business, hopefully, right? To do that. Taxes are one of those things where there are different opinions. I've actually heard the SBA give multiple different opinions on it. I've heard some say yes, and I've heard yes, if they're business, definitely business taxes. That's one of the things that kind of gets confusing with paying taxes with EIDL is the fact that sometimes they're not business taxes, they're personal taxes, and because that all kind of gets lumped together for a lot of business owners, unless you're a C-Corp. But if you're paying estimated taxes, right? Well, technically you're supposed to be paying estimated taxes out of revenue you're making because that's what the taxes are based off of, right? But in truth, that's not always what happens. So you can whatever you do, document it out. It does say you can pay the IRS. That is in the SBA documentation around EIDL. Some people are saying, okay, well, you can pay currently due taxes, but not ones that are from a couple years ago or what, So there's a lot of people giving opinions on this. If you want to be safe, it depends on your risk tolerance, right? Document. Use my EIDL tracker to document everything. Keep all of your receipts, et cetera, et cetera. Same thing with credit card. If you're paying off the credit card, just make sure the things that you're paying off are actually things that you can use EIDL for, regular operating costs, right? But just try to use it on the things that you can use it for, right? Just do your best to do that. Remember, you don't have to use it over a certain period of time. So cash is fungible. Cash is fungible, y'all. So just remember that and do what you need to do to stay in compliance. Okay. And if so I talked to the SBA rep the other day. He said, essentially you have, I think it's 30 days. I think it's 30 days to go from the period where you log in, you get your offer in the portal to accepting that offer, which you can take it down. 25,000 is the limit. If you don't want to have collateral, right? 25,000 and under is what you want to do. Once you do that and accept it, then they're going to process it and give you your paperwork. And then once you kind of get the invite to sign your paperwork, you have 60 days and you're not required, according to the SBA rep that I talked to, you are not required to take that. So you can let it sit for 60 days. If you're not certain if you're going to need it, that might be something to do is get it to the next level and then wait and see if you're going to need it before you take delivery, because the second that you take that money, interest starts accruing. Okay. Even if you don't have payments for a year, interest does start accruing as soon as you get the money. Keep it in a business account too. I get a lot of people who want to put it into a money market or put it into a CD. That could be construed as investing activity, which would be misuse of funds that you'd have to pay back 1.5 times. Don't do that. Just keep it in a business account. It can be one that has some interest, but guys, interest rates are lowest ever right now. You're not going to get a whole heck of a lot. It's not going to make up for the interest that you're accruing on the actual loan. Okay, and we don't know how long that's going to stay open. So make a decision, either PPP and EIDL, right? If y'all are sitting trying to make a decision, just act, because that money, everything could change tomorrow, right? It could be all gone tomorrow, or it could be here for another month. We have no idea. Or they could, have a new round, but I don't see that happening personally. Okay. Let's see. Okay, ask me your questions now because it's hard to, there's so many comments, it's hard to roll through. So if you have questions, I'm going to stay on for another like 10 minutes or so and answer your questions. Let's see. So Jason got his loan yesterday for no grant yet. Yeah. So they just keep changing with how the grant is working, but you should get it. If you checked the box to get it, that's the problem. Some people who didn't get it didn't check the box, but some people make sure when you're filling out that application that that the information you're putting in for your bank account matches exactly with like your business name, right? So if your bank account is under your personal name and your personal social, put that in as the applicant, right? So don't put like EIN in one and social in the other, like make sure, or business name on one and personal name on the other, right? Make sure that aligns because that was one of the reasons people were getting rejected. Also, when you're filling out the EIDL application, cost of goods sold, y'all, is just the cost of goods sold, meaning direct costs. If you're in a product business, it's going to be direct cost of the goods you are selling, the like wholesale cost of those goods or the supplies to make those goods. If you are, and check your tax return. If you're a service business, you may or may not have any kind of cost of goods sold, cost of sales. Check your tax return, Schedule C or on your 1120S or whatever it is that you file. Check to see if you have cost of goods sold and use that. I think a lot of people use the wrong thing. They put their operating expenses in instead of cost of goods sold. And what that did was essentially make people think that you didn't have enough gross profit to justify a loan. And they told people that they essentially, what was the word they used? Something like economic injury was not substantiated. I think that's what they said. And it was because people put their full operating expenses instead of just cost of goods sold into that line item. Okay, let's see. Let's see. So if you took the EIDL 1K grant and you don't get forgiveness for this, is this 1K now a loan if the rest has been forgiven for payroll? I'm assuming what you're meaning is if you got PPP, is that what you mean? So if you don't apply for forgiveness for PPP, then your EIDL grant amount won't come off of it. So I think that that's what you're meaning, but I'm not entirely certain. Let's see. I received $5,000 deposit for EIDL. You have a large loan that you don't want. Just don't accept it. Just don't accept it. Now they're calling people and telling them to like accept it and send it to the next. So if you think you could need it, you can accept an amount. And I would do, if you're not sure, do under 25K, accept an amount and then leave it for that 60 days. Don't sign the documents. It's not going to be your loan. You don't have to take it until you sign it. If you think you could potentially need it. But if you're like, I know I'm not going to need this and I do not want debt, more power to you, Deborah, and just don't sign it. And when the SBA calls, just say, I'm good, thanks. Let's see. Let's see. If we choose 24 weeks, do we have to make the PPP last that long to qualify for full forgiveness? No, because the money won't last that long. So it's only 2.5 months worth of payroll. So no, you don't, you would be supplementing your staff. Like if you kept your staff on during that time, you would be supplementing with your own, income, but you don't have to, although go back to the conversation before where we talked about safe harbor and FTE calculations, because it gets kind of complicated, when we talk all about that. Let's see, since PPP now knocks us out of 10 weeks of PUA for owner self-employed. So is it more 1,000 EIDL deducted from forgiveness so we can give back the EIDL grant that is already in our bank account? So I think what you're meaning is because you're taking the 2.5 months, there's 2.5 months you can't do PUA. Yeah. Yeah. Is it more official to not have the 1,000 EIDL deducted? It's still on the application to have the 1,000 deducted. So I don't think it matters. Like they haven't made an exception to that. Now, could they like at some point waive that and just say, you know what, we're not going to worry about it. Maybe. So like a lot of people are like, how do I give it back now? I'm like, don't worry about giving it back now. You don't need to give it back now. There's no like interest accruing on it right now on it. It's going to turn into a PPP and that's super cheap, right? Like 1% loan over 2 years or 5 years, super cheap. So you can keep it as a loan if you wanted to. or you could pay it back right away, that EIDL advance part. But there's no reason people are like clamoring to go give it back right now because they're worried about it. I would hang on to it just in case they change the rules again. And then you don't have to be the person that's like, man, I gave my advance back. I don't even know if you can give your advance back, honestly, but you don't want to be the person that's mad that you gave your advance back that could have been yours. More than likely that's not going to happen, but I would hold on to it just in case. Don't spend it if you're worried about it becoming a loan. But let's see if my entire PPP loan is less than my actual payroll. Well, it will be. Do I only need to submit payroll calculations to get forgiveness? Yeah. So you don't have to spend it on anything else. That might be the easiest thing rather than having to like show rent and utilities and all that stuff. If your total payroll that you paid out, is enough, then you should be good. Good to go. You can spend the full amount on payroll. You don't have to switch. It is something that you elect when you apply for forgiveness. So you just decide whether you're going to do 8 or 24 weeks now. And then when you don't need to tell anybody until you apply for forgiveness. With your bank, when they'll have a process, they will probably tell you, or you can inquire, but they'll probably have a process. You'll apply through the bank that you got the loan through. What if I filled out EIDL cost of goods incorrect? Can I change it on the application after it's been submitted? I don't think you can in this stage, but if you get denied, people are having the ability to submit a contest the results. So you might have to wait till then. They do seem to be doing it way faster. So for those of us that like applied for EIDL months ago at this point, like, gosh, that seems like a lifetime ago, and didn't get anything until recently, they're doing it way, way faster now. So that's the good thing. They have their process up in place now. So you will not have the multi-month wait that most of us had more than likely. Okay. Let's see. Yes, you'll be able to watch from the beginning once I'm done. It's just because I'm still talking, so it won't let you start it over. But as soon as I'm done, the replay will be up on YouTube and in my group, Financial Literacy for Women Business Owners, and you can watch the whole thing. More power to you if you do that, because we're going to be at about 120 minutes or an hour and 20 minutes. Let's see. If your PPP is overfunded as a sole proprietor, yes, you have to still use the same calculation for paying yourself. So the max that you can get forgiven with PPP funds is going to be net profit, Schedule C line 31 divided by 12 times 2.5. That's what you can put as owner pay. Now, if you got overfunded, right, which did happen to a lot of people, you can't pay yourself more, but you likely, based on the way the application works, it doesn't ask you if you got the right amount, right? More than likely, you can use that additional money to spend on other things, like rent, payroll. Like, so if you had a little bit of extra that they gave you, you may be able to still be forgiven for that, based on that. So you could potentially be able to use it for those non-payroll amounts to use the rest of it. That's my read of the forgiveness application. Nowhere does it say like, hey, tell me what your loan should have been, and then I'm not going to give you forgiveness for anything about that. The way that it's set up, it would allow in the calculation essentially for you to use the whole thing, as long as you used it on regular costs. Okay, let's see. 2 more questions. Let's see. Sole proprietor got $5K for 8 weeks. If he wanted to go the whole 24 weeks, where is the money coming from? So it's not that, so I think this is where with sole proprietors, it's not that you can pay yourself for a full 24 weeks. You get 2.5 months of payroll. It's basically 10 weeks worth of payroll, right? Now, the question is, and again, it's based on a formula. So it's not even like you pick the time frame, although if you're on PUA, you maybe can just pick a time frame and say, this is when I'm paying myself, right? You don't get 24 weeks. So the extension helps, the way that the extension helps self-employed people is the fact that instead of 8 weeks, you can now take the whole 2.5 months to pay yourself. That's the benefit to self-employed people. Employers have a benefit in that they can now pay employees more money, right? So they can pay more out to employees over the full 24 weeks. So maybe you waited a month to rehire back, right? And now you're back to full staff. now you don't have to use that full 2.5 months worth of payroll in 8 weeks, right? You have a little bit longer to use it, but they're not giving anybody any extra money. Let's not confuse that. Okay. Let's see. I do not, unless things change significantly. I do not. And maybe the funds that they already have authorized, if they don't use it all up by June 30th, maybe. But again, I think unless there is and I don't think that there will be a whole nother shutdown or anything like that. There may be other programs that pop up though. If there are certain industries that are hit hard, they may have other stimulus options. I have not heard talk of another round of PPP because there's still money outstanding for this one. So they're not going to talk about another one if it's not gone. Okay. All right. So that's the amount of questions I had. I want to talk a little bit. So today was supposed to be more of a regular kind of Q&A. Let's talk about things. Importantly, for anybody who is interested, my Financial Fitness Basics course is still on sale. There is a launch sale that is only valid for another couple of days. So you want to get in on that, balancecfo.com/basics. You can find out about it. Right now it is on sale. It will not be at this price again. There's some awesome bonuses. It's really about teaching you basics of your business finances. So if you haven't checked it out, go check it out. That's what helps support my business and helps me to be able to show up for free for you guys to give you as much information as I can to make these freebies for you. I only sell things a couple of times a year, and this is one. And this is basically based off of a lot of the questions you guys asked me. You were saying, well, I'm an S-Corp, but I'm not paying myself a salary. Should I be? We talk about that. I have a bonus all about S-Corps that we get into. We talk about entity types. You're going to figure out if you're the right entity type. We talk about, financial statements. We talk about P&Ls, balance sheets. So if you're in that place where you're maybe you're self-employed, maybe you are a small business owner, but you want to kind of understand your finances, and all of this has made you realize that you really want to understand it a little bit more. That is for sale, but not for long, okay? And you guys, I am offering scholarships to women of color. I was going to announce those winners. I'm going to hold off because we're still having people that are donating that want to sponsor a scholarship, which is amazing. So I was going to give 5 away, but we had over 40 applicants. So now I'm giving away 10. So 10 of those will be funded by me. They are scholarships for my course that are going to go to some of the applicants that already got it. And we have another, I think, 11 that have been funded by people in this group who just wanted to give and fund scholarships for these women of color. I would love to get as many of these 40 plus applicants that we have that have applied to get scholarships covered. So email me at support@balancecfo.com if that's something that you're interested in doing, because y'all are amazing. You're an amazing community. So make sure to check that out. Again, it's not going to be for sale for long. So I just want to make sure everybody knows about it, because I know every time, if I close the cart and you guys get upset that you didn't know that it was closing. So make sure to go check that out, balancecfo.com/basics. That's all I'm going to say about that. And this was 1 hour and 22 minutes. So for those of you that stayed with me this whole time, you get a gold star. I'm going to go drink some more coffee because I need it right now. There will be more to come out. Make sure if you're watching me on YouTube, subscribe to my channel. I'm going to be doing some more kind of bite-sized things like this as well that are going to go over specific things in this forgiveness application and really kind of hone in on some of these things, because I really wanted to give an overview during this, but I know it's a lot of information. So I'm going to do some more targeted videos that will be coming out on YouTube soon about all of those things. Okay. All right. Y'all are awesome. You're amazing. And I'll talk to you later. Bye-bye.